Good afternoon and welcome to Countdown right here on BloombergQuint Live. We have come off from the highs of the day. The banks too have come off, so we've not been able to sustain those high levels. This could have been any other day, frankly. This need not have been the day after the mega announcement. The question is, can the markets do well if indeed the finance minister gives us some dope about what the nature of this stimulus is likely to be, or will we continue to remain a sell tomorrow as well? That's the million-dollar question. I think we'll get the answers in a few hours. First, though, remember at 4 p.m. and we'll be here at BloombergQuint Live on all our platforms to tell you what the finance minister is saying. First with the finance minister's speech and then an analysis. But first, what's happening in the markets? Well, as I said, look at the intraday and you will see that for the bank nifty in particular, we've come off, and you can see it in the way the heavyweights are behaving right now. It tells you a story about how the moves have been. So ICICI Bank was up about 7.5% and it's up about 5.5%. Axis Bank is the top gainer, about 6.77%. Bajaj Finance is just 2162, 4.5% higher. Some strength in SBI. HDFC Bank has completely come off, 927, about 3% higher. So there is weakness perceptible in the banks as well compared to the highs of the day. Yes, net 4% higher is nothing to scoff at, and you would say that that's a good announcement. The point is, were we looking for more? I think that's the key question. Nestle, it's a big sell on the numbers. After the numbers are out, maybe the market not liking the valuations, maybe rumors of some bit of selling happening in Nestle on the institutional side, leading to this stock correcting quite viciously in trade today, down about 5%. Sun Pharma, Bharti Airtel, HUL, TCS, and Dr. Reddy's and Cipla are some of the others. So the defensives have come off. Banks are higher, defensives are not. The problem, as I said, is only that the banks too have corrected from the highs of the day. Just very quickly, before I get to Rahul Mohinder, just a quick whiff of what's happening at the broader end of the spectrum. Vodafone Idea 2, by the way, which was a big mover yesterday, is in the red. But BHEL 21% higher, 26.15. Engineers India 12%. REC about 12%. So power, Bamal Lorry, PFC, Bharat Electronics. So it's power, construction or manufacturing. Essentially, that's the theme that's played out really well in the session today. The question is, can it continue? Rahul Mohinder Johnson right now with his thoughts. Rahul, it was a fabulous call last time, just that the Prime Minister's announcement gave a bit of a fillip today. Otherwise, stay short or stay out was probably the right call to give. The question is, what now, Rahul? Because there is an announcement pending today, announcements probably over the next few days from the Finance Ministry. Do you reckon that the charts and the sentiments are pointing towards the same direction, or are they pointing towards divergent directions?
Good afternoon, Neeraj. I think it's absolutely divergent, and the merit in the case is the fact that if we look at the data of price from about May 4th or so, approximately the last 10 odd days, it's been very tough for the Nifty spot to even maintain a level of 9,400 to 9,450. It's always come to that level and got sold into. And, even if you look at today's opening, yes, we were gap up in terms of an opening, but we all know how long did we hang into it. We couldn't even hold 94.50 for half an hour. So it just goes to show where the sentiment is, what a rally is being used as an opportunity to exit, to sell, to get out. So I think the sentiment is very clear. Today also, I continue to think that we may try and give it external fillip. But in the main, my read on the global equity markets, including the Dow, as I pointed out last week, was negative, continues to remain negative. In fact, let's extend the argument a little more. The Dow rallied up about 36% from the March lows. The Nifty spot rallied up, I think, probably 32-33% from the March lows. So I think we're very much kind of in that sync, dealing with the coronavirus factor. Is one element of it, but stimulus could be something which is short-term and short-lived, in my opinion. From a technical standpoint, we haven't broken out. I would still say be very, very careful, especially if a heavyweight like Reliance starts going down, breaches its key support of 1450, or the Nifty is unable to hold on to this 9350 level, which we are kind of, really playing with at borderlines right now. These are very critical numbers to keep in mind.
I don't know if this issue keeps on happening, but can the banks, Rahul, provide that support? Because the bank Nifty is looking okay, down off the highs of the day, but still up about 4%. Can the banks do that? And couple that up with maybe one idea, Rahul, one trading idea for the day?
See, on the banks, I still think, yes, it's a little better than the Nifty chart per se. And really it's because a lot of the stocks like SBI, etc., didn't participate in the March, April, May kind of upward rally that we had. It still made significant lows. So I think the heavyweights within the bank Nifty will come in and probably give it support. So yes, the bank Nifty does look the better index of the two. And, specifically if you're looking at levels on the bank Nifty as well, I still think that unless we, breach a level of 18,750, we won't probably break into new lows. See, stock specifically, if we're trying to look at something within the banking play, I would still say Axis Bank has given a very good, robust breakout even in these market circumstances. I still think that we'll rally back to about 460 to 450, around those levels on Axis Bank. So that would be my buy.
Okay. Just before I get in, Yogesh Mehta, Rahul Mohinder, a quick follow-up. What about the big boy HDFC Bank? Kotak Bank is a result reaction and there is an overhang of a share sale, so I won't come into that. But HDFC Bank, there was expectation that there would be a short squeeze today because a lot of shorts piled in the system. It hasn't quite played out. It's still doing okay. What do the charts suggest here?
See, here again, if you look at the overall picture, it's really done nothing much in terms of price action all of last month. If you look at the whole month of April, we've kind of held lows of about 850, 860, and on the top, rarely has it been able to significantly get past levels of 950, 960. So I think it's largely range bound. This is not a point where I would like to take a new short call at the same time. I'd wait for a little more stability to come in, but I must say that the chart continues to be in bear grip. It's below the 200-week moving average. It's below the 200-day moving average. It's very tough for me to even kind of stick my neck out and say I'll buy with a tight stop. So, this is a point where I would absolutely avoid going long. I'd wait for it to consolidate a bit more.
Axis is doing much better though. Rahul is right. It was 7% higher, 413, and has done reasonably okay. The last 1 month has actually still in the negative for Axis Bank, but breaking out in the session today. Yogesh Mehta is with us as well. Yogesh, today, when I look at it from a moves perspective, everything related to manufacturing, power, electricals, etc. is doing well. What have you observed? I mean, the Larsons, the BHELs, the cap goods, or the power names, power financiers, is that a pocket that you would maybe look opportunities for?
Neeraj, good afternoon. According to the announcement, I don't foresee that capital goods is the one which I would like to have as a position ahead of the announcements today, because the way they have shown their interest in all four Ls. So I think that one of those would be capital goods segment where L&D is there, Cummins India is there, but my preferred pick would be L&D. Bail is something which has already gone up. Today it is by 25-30% odd, and though it is in an oversold territory or the valuation by it was available at third cheap valuation, so as Bharat Electronics. But I think L&D would be decent enough to hold on to, because if you run after the last man which is running, then it will be always the last one. So I don't foresee that after 30% run up in bail, it would not be wise enough to get into those stocks. Rest of the pack, I think Havells has come out with the results. So much of a disappointment there, 10% downtake into the profitability against the expectation. But more or less, I think it is pricing between 460 to 500 level. It can be a good accumulation, and I believe that Havells would be the one for at least 10-15% move can be looked at.
Yogesh, I think Rahul Mohinder pointed out a critical aspect for the market. Reliance Industries and the shave off that it has had since yesterday, now that the date for buying the shares for the rights issue is also gone. And I think that Reliance pullback is also to an extent dragging Bharti and Vodafone, which were very active in trade yesterday. What are your thoughts on all of these three? I'm including Vodafone because it's come into the realms of conversation over the last 2 days from a lot of people.
Especially, I think telecom sector per se would be the next sector, upcoming sector, which may become a darling or the fancy for all the fund managers and HNIs as well. What I believe is that there is no slowdown impact on this. The earning consistency will be there. We have seen data usage has gone up through the roof right now in the lockdown period as well, so that it has become necessity now. I believe strongly that it has to be there into the portfolio. EBITDA level, Bharti is second, but the difference between the Jio and Bharti is much wider. So that wider that gap can be narrowed down further. For that, Bharti would be the one we have seen South Africa numbers in terms of dollar term. I don't see that it will be much more dent to the valuation here. But overall, both are equally having a great wallet share to the subscribers. So both are good. Idea is something, it is a joker in the bag. You never know at 4 rupees if you buy somewhere 4 or 5 rupees. And this company is not going to go lock the doors, and it will remain there as a third player. And any which ways, Vodafone PLC is paying a part of their AGR dues in EMI, maybe 10,000, 8,000, earlier it was 4,000. They are willing to pay. So the willingness shows that they are there and it is alive. The expectation is also alive, so it will remain there. So at 5 rupees, sometime you may get your debt investment. Debt investment, you may get your 50%, 100% return over next in next 12 months.
Okay, I'll actually move to queries right now, if we can, simply because we were discussing telecom and there is a technical view sought in on Bharti Airtel. So I'll move on to queries, and I'll start off with the query that Girish Sharma has asked. He's asked for the technical view on Bharti Airtel. Rahul Mohinder, big surge in the two pure play telcos today, if I will, which is Bharti and Vodafone. Slightly soft in today's session, flattish, if you will. Is this a consolidation before the up move resumes? How would you view a Bharti Airtel?
Bharti continues to look very solid and probably will outperform the overall index. We have targets on this on a slightly more longer term towards 600 to 620. That's the kind of zone we're eyeing. The question is, what do I do as an investor in terms of getting in at these levels? I think if you're someone trying to buy at this point, you tend to have a bit of a largish risk, because I would advocate a stop loss below 520. So I'd probably look at getting in only on a pullback rather than at the current level.
Foresee a pullback, Rahul, here? The chances?
So if I look at the odds of a pullback are fairly good. I think 530 to 540, that's a level I would clearly be eyeing. And, a short-term correction is always possible in these volatile markets, and that's where I'll be looking at an entry.
Okay, so that's the view on Bharti Airtel. Now, there is a technical call for a view on Central Bank from Gaurav Jaggi. If I can actually use that as a technical view, and then we'll ask for the fundamental view on Nestle. But the technical view on Central Bank by Gaurav. Any thoughts here, Rahul Mohinder?
I think first and foremost, if you look at Central Bank, we're looking at a long-term outlook which continues to look negative to me. At this point, I would say that this is not a stock that I would really like to add in terms of a position, even from a portfolio standpoint. My own sense is this will continue to lag and probably will need a lot more consolidation before any kind of breakout. It's an absolute avoid. If you really want to look at something longer term and you're trying to buy something that's deeply beaten down like Central Bank, well, there's always an SBI to fall to. So I would say Central Bank, an absolute avoid.
Okay. There is Hivang Paliwal who's asking for a fundamental view on Nestle India. Yogesh, any thoughts here? The stock is cracked big time today post the numbers, which were actually much better. What's happening here? And what's your thought here, rather?
Okay. For Nestle, I think the double-digit domestic growth is decent in COVID-19, and we see that everybody is go about piling up the stock for FMCG and the stocks. So that has given volume growth by Maggi, KitKat, and others. Rest of the thing, I think overall, with ongoing scenario, the supply chain disruption, disturbance will play a key role for that. And on the valuation front, also post this gross margin, which has declined overall by 200 to 220 basis points in this quarter. So that is driving some kind of a negativity precisely. So I think valuation-wise, 65, 66 times current year and forward would be somewhere around 56, 57 times. So it is not justified in this kind of a situation. And any which ways lockdown is going to over by next 1, 2 or 3 months. It is not going to be there till March 21. So overall, the valuation perspective, I would say that upside remains very limited. So that's why one should look at booking profits here in Nestle. No doubt it's a good feather in the portfolio, but yet there will not be much of a returns from current level. So only due to this only, I would say that one can book their profits into this.
Okay. The other question that has come in is for a short-term view on Aurobindo Pharma and Cipla, and I think Shrikant Chauhan is joining in the conversation as well. Shrikant, we'll come to your index view in a bit. Can I ask you for a view on Aurobindo and Cipla?
Both the stocks are completely into different direction in the short term. Yes, in the medium term, we have seen a very secular uptrend for both the stocks, but Aurobindo Pharma is really doing well. So I'm of the view that Aurobindo Pharma is heading for at least 735 in the near term, in a very short term view. I'm to say with a view of next 2 to 3 days, we may see the levels of 730.35. So there he can take profit. Hold long positions with a trailing stop loss at 660 on the downside. And for Cipla, I think it is very close to its support area. So even if there is any fresh view of creating any long position, then one should look for adding position at this price. Or if there are any old positions, then one can look for holding it with a stop loss at 560 on the downside.
Okay, I usually avoid talking about Z because it's such a difficult counter, but the last 3-4 days, there's fair degree of activity, fair degree of volumes as well. Shrikant, can I ask you for a quick follow-up? It is looking fairly strong today, Z Entertainment, 164, 164 half. What do the charts suggest?
See, purely on technical, the positive part for the stock is that it is forming continuation bullish triangle. And today it has broken this level and it is sustaining well above that particular breakout level. So based on it, we may see the levels of 190, 193 in the near term. That's the view. And the other positive part is that it is holding above the important retracement ratio of 145. So I think it is heading for the levels of 190, 193. That is very clear. So just hold on to positions because all the media stocks are also doing well. And I'm of the view that technically someone is accumulating this stock with a view of at least next 2 to 3 weeks.
Okay, that might entirely be possible. The other bit, I think I saw some excitement today in some of the liquor names, United Spirits, United Breweries, some of the others, but they've come off, as has the market, of course, as I said. But Rahul Mohinder, if I can ask you for maybe a chart or a positions check on let's say United Spirits, because that was looking pretty excited in the morning.
If you look at United Spirits, I think this is a level I would look at accumulating the stock. And, clearly because of the fact that historically, if you look at the last 2 or 3 years, anywhere between 470 to 480 has been a reasonably good buying point, and it's very strong support. So if you're someone who's got a slightly longer term horizon, this is the point where you can start accumulating the stock. And I would keep a stop loss below that 470 mark, which I just mentioned. I think the stock can reasonably move up to, its next resistance, which is closer to that 580 level. So there's a decent upside, which at least a trading upside, which one could be looking at.
Yogesh, what could be reasons for people to accumulate United Spirits? Today I've heard a few, some of the smart money moving into United Spirits. Any thoughts here? Fundamentally, why would somebody want to buy United Spirits at the current juncture?
See, Neeraj, the demand for liquor, especially for the brand which United Spirits holds, that has got a good market share. And the demand, we have seen that in the lockdown period, if there is a release for only a day, and we have seen the long queues out of that. I believe that EPS growth per se for this, the demand will remain there, and EPS growth from 12 to 17 would be somewhere around 40% growth rate would be there for FY 20 to 22 in 2 years. So that gives a good foresight about the investment. And I believe that the demand will remain there. Even if there is a luxury tax or sin tax will be there, it is not up to that mark. 70% it has been imposed right now. It is not like cigarettes. So it is not like a cigarette which will be harmful for health. So this is a boon for those products and for the liquor lovers. And I believe that, yes, it is going to be there and demand will increase day by day. and consumption will be there. So I think it will be a strong contender for a portfolio entry as well.
By the way, IRCTC is up and active in the session today, I reckon, if I'm not wrong. It was active the other day. Today, with a lot of these ideas that we've discussed about in the past, the likes of Godrej Properties, which has shown a sharp spike, IRCTC is up 5%, 1437. Yogesh, must say it was a fantastic call when that stock was going down that you decided that, or you gave up that call to buy. What does one do now? Train services could resume anytime. The monopoly stays. Is this a stock that you would continue to like and continue to accumulate, or now it is becoming a bit expensive?
In terms of 21,000 around market cap, I think it would be a little expensive. But those who are holding on, this was my view for DMart as well. And we have seen the fantastic run up in DMart and fantastic returns as well. In IRCTC, it is just a temporary down. It's a monopolistic business. Once the lockdown is over, then the resumption for all the services and the profitability will continue. For this 2 months of loss is not going to be so severe, and that can easily cop up over next 1 month of booking. I think if anybody wants to really look at not the valuation but the growth, then this is the company for a portfolio holding. One can keep accumulating this stock. Nevertheless, even if the stock goes down by say 20-30% from current level, still it would be a good portfolio entry, and one can keep it. Already the stock has moved from 700 to 2000, from 2000 to 800, so volatility is too much. 1400, I think this may occur, this IRCTC, but this may occur for the cinema halls and any other category we look at. So this would be a good opportunity to get into, and IRCTC would be a portfolio stock for at least next 2 to 3 years.
Yogesh, final question before we let you go. And that is on the two result boys today. Quick thoughts, any one of them, Kotak Bank or Maruti Suzuki? Maruti, the margins got shaved off quite substantially.
Yeah, Neeraj, Maruti always had given in last 3 quarters, it has given a positive, negative surprises and shock to the investors about the result. There is always a blip. I would say one can look at Maruti, but at lower level, and Kotak, the numbers are decent enough. The NPA number is very much controlled. So I would say between these two, Kotak Bank would be the preferred one right now. If Maruti would have been at 4,500 or odd, then I would have preferred Maruti as well. But Kotak at 1180, 1200 level seems decent enough for at least 10-15% return from here.
Okay, Yogesh, we'll leave it at that. Thanks much for taking the time out and speaking to us. Okay, before we get in the BTSTs, Shrikant Chauhan, a view on Bajaj Finance. It's off the highs of the day, but looks solid. Banks, financials, the mood is pretty okay. What about this one on the charts?
Yeah, I think all these financials are really waiting for the support which is going to come from the government authorities or FM side. I think that is why the stock is holding. But at the same time, if we see the overall formation of Bajaj Finance, then the stock has managed to form higher bottom even though there was panic in the market. So I'm of the view that it is heading for the levels of at least 2350, 2375 in next 1 or 2 days of time. So certainly it's a buy at these price, because whatever the outcome which is going to come, for that we need to wait and we need to whether it is like going to support this particular stock or to NBFC sector or not. So in that, this particular stock is really doing well in last 10-15 days. So it's a buy at these price, but we should maintain stop loss at 2050 for the same.
Okay. Now, viewers, I'll ask the BTSTs to our experts, but I want to give a disclaimer on their behalf as well. Remember, we have an important event, which is the finance minister's announcements about what the details of the package could be. And mind you, a lot could hinge on what the finance minister says. So something that is looking very strong on the charts today might start looking wobbly tomorrow. Something which is not being considered right now might suddenly shoot up as well. So please mind that at the back of your mind if you're indeed following what the advice that both Rahul and Shrikant are saying. But let me ask for the closing strategies. Shrikant, to you first. Your top one closing strategy, one top closing strategy.
Neeraj, I would like to go with then Reliance Industries. The stock was around 1615, 1616 levels. From there, all the way the stock has corrected to the levels of 1450, 1460 on the back of some adjustment for right issue. But I think after this adjustment, I am of the view that the stock is again going to surpass or going to retest its previous high of 1615, 1620. And once the stock breaks its previous high, I am of the view that it is heading for the, it may even hit the levels of 1700. So it's a buy at this price with a very decent stop loss. Risk reward ratio is quite favorable. So buy at this price with a stop loss at 1440 on the downside. Again, we can expect 1700 on the higher side. So it's a buy call for next 1 or 2 days of time. It's not very short term call, but it's a buy at this price.
Okay. Well, it is in the green, by the way, 1497 right now. 1496 is Reliance Industries. What about you, Rahul Mohinder? Your top closing strategy would be?
I think Tech Mahindra continues to stand out. I like the stock with a 530 stop loss. I'll be looking at Tech Mahindra moving to levels of 585. Mind you, this has been resilient even on a day like yesterday where the market did crumble. All in all, I think the setup on the short term looks very favorable here. So I'd maintain longs on Tech Mahindra.
It's interesting, Rahul. IT is not looking all that strong. The other heavyweights are kind of a bit flattish to marginally lower. So you think Tech Mahindra is a bit of an outlier?
Yeah, absolutely. I think if you look at even yesterday's picture, Tech Mahindra, I won't say it had a big up move or anything, but at least it kind of stayed steady. And, at this point, I want to look at a chart that's structurally looking a little safe and solid in the near term. So that's where I see Tech Mahindra, decent consolidation. It's done over the last 2 or 3 weeks. I don't think you could go gravely incorrect on this one.
Z is piling on the gains as we close shop. 168.2, 8.35. We already spoke about it technically, so I won't repeat, but do be mindful of that. That is looking solid. I think Shrikant mentioned that it could actually do well. Axis Bank was amongst Rahul Mohinder's key calls in the banking space, and that one is closing in at the high point of the day. The other big one are some of these old economy related companies. So L&T, Adani Ports, Ultratech Cement, Mahindra and Mahindra. The entire bucket of stocks is doing rather well for itself. So those are a few names that you have to monitor very, very closely. As we shut shop, one quick chart check on Asian Paints. Shrikant Chauhan, 30 seconds.
Yeah, the stock has fallen to its extreme level of 1520, 15. I'm of the view that the stock is forming some symmetrical triangle sort of formation, and it is available at the lower boundary of that particular formation. So it's a buy at this price. But here again, we need to keep tight stop loss at 1515 on the downside. Again, we can expect somewhere around 1660, 1700 on that side. So upside is great, and risk reward ratio is quite favorable. So it's a buy at this price, buy more on dips, keep final stop loss at 1515.
BHEL 25%, Shrikant. Any thoughts?
Yeah, there also the volumes are quite interesting. In fact, all PSUs, Bharat Electronics, again, it's a quite interesting stock to watch out for. But it is going up and the volumes are great. I think some announcement may be lined up, but overall the formation is suggesting us that the stock is heading for at least 30, 32 in the near term, because these volumes are quite exceptional volumes. And I think there are like number of people who have bought this stock when the stock was around 35, 40 levels. So it's a hold at this level, and we can again expect 34, 35. That's the overall view.
Rahul, very short view if you can give me, that is on Mahindra Holidays. It's not something that we often discuss, but it's had some very good days the last 2 or 3.
Near term, yes, the stock's been moving up, but would I be a buyer at this kind of a junction point? No, and that's clearly because of the fact that there's strong resistance around 190 odd. So, there's another 10, 12 rupees on it. So you may see another 5 to 8% surge, but I'm worried will it go further from there.
Okay, and pertinent point. Viewers, I won't do a very large market wrap or close because we've discussed stocks, all of them. Just want to mark the gas companies, IGL, Gujarat Gas, etc. are all of them very soft today. So that's the one point that you got to monitor. Karur Vysya Bank has come off today. Biocon has been low today. I think the MSCI additions and the flows that were expected in Biocon, IGL, etc. all of those stocks have actually stayed lower. So be mindful of that. Aurobindo is down about 2% as well. So Pharma has taken a bit of a back seat today. But JSPL, we didn't discuss metals at all today in the half an hour. But we obviously can't discuss everything. But JSPL, JSW Steel, Vedanta cooled off a bit, but the others are doing reasonably okay for themselves. So there are these set of companies which are having a remarkable move in the session today. The point is whether those can last or no. And for the index as well, as we've settled shop, it's about 2% higher, nothing too dramatic. This is this is not the kind of follow-up move that you have after a really big bang announcement by the Prime Minister. And that means one of the two things. Either the market is not convinced, as Rahul Mohinder said, because we are not able to sustain the highs and therefore sell on highs is probably the move. The other view could be that the market is waiting for the finance minister to make some clarifications about the nature of the announcements, and therefore we could probably do well. The other big thing that I mentioned in the trade setup today morning at 8 a.m. that the globe is not in our favor. US markets were down, futures were down on open today, and Europe has started off in a very bad fashion. It's 1.5% lower for the European indices. So the US futures are flattish right now, but the world markets aren't quite playing ball. And in such a scenario, I mean, you need some bit of global support when everybody's moving in a coordinated fashion for us to really outperform. But I think the globe is probably a bit of maybe not an excuse really, but just for today, a bit of an excuse. The larger trend may be lower. The point is, can the finance minister give us details which might please the markets tomorrow? I think that's the key thing. Rahul, I want to start off this final question session with you, and then I'll go to Srikanth for his overarching view. But you didn't seem too bullish. My question is, if indeed the finance minister's details lay out some optimism, and the markets were to start off 50 to 100 points higher, let's say about 9,500 tomorrow, would you be a seller on that rally?
Not really. That would structurally create a lot of changes on the chart. And, as you mentioned, that this is could be a potentially major announcement. But, to have that kind of follow through, stay and sustain above, I think the main thing about everything remains is, can we sustain? Is that announcement good enough to reflect a sentiment change? Can we at least stay an hour or two above 94.50? That will even make me change and rethink that, do I stop being bearish and start thinking on the upside?
Okay, so, well, that's a nice nutshell view. Keep that in mind. I think all of these things depend on how the structure changes. I think for technical analysis, that would be very, very important. Srikanth, we haven't asked your index view, either the Nifty or the Nifty Bank. What's your overarching view?
Neeraj, very first thing to understand here is that whether the market is going to cross the level of 9,900 or not, which is very, very important and crucial for the market, because a market is forming some specific consolidation formation. And in case if market fails to break the level of 9,900, then in that case, we may see vertical sell-off in the market. And that is why we need to be very, very careful if the markets are approaching to the levels of 96, 9,700 levels. So there we have to be very, very careful. But today we are of the view that we should look for adding some call options, because the announcements are still lined up. And even if we see the levels of 9,700, then also it's a great upside from current levels in such type of uncertain markets. So we advise our clients to buy some call options at 9,400 strike price of the current series and current week, of the current week. But we need to keep a close watch on the market for next few days, because time-wise also the market is completing its consolidation formation. And if the price reaches to 9,700 and if it starts falling, then it would be a great disaster for the market. So we need to be very, very careful over here. I think US markets, on which you already discussed that they are not in our favor, which is true, and they have already started their fall. So if we see furthermore decline in US markets, then I think certainly it is going to impact on our markets also.
Yeah, it could, and therefore the banks could be interesting. But all eyes, as we said, on the economic package. Rahul Mohinder, Srikanth Chauhan, gentlemen, thank you so much for taking the time out and speaking to us today. Appreciate your time. Trade safe.
Thank you.
And viewers, keep in mind, 4 p.m. is when the finance minister starts speaking. We'll be here to give you their entire speech, the highlights later on. And if indeed something dramatic comes about, then do a discussion around that as well. So be mindful of that. We wrap it up on this leg of countdown for now. But I think if as we go, maybe you should hear out Saurabh Mukherjea. Can we make our viewers hear out Saurabh Mukherjea? I think it's a conversation that we did with him earlier, and he sounded pretty bullish on how the next couple of weeks would be. Hear out what he had to say and then come back at 4 p.m. for the finance minister.
I think more than the quantum of the package, which does sound surprisingly large, although I suspect the details might be might be suggestive of the fact that the RBI's monetary stimulus, which is I think around 4% of GDP, maybe that's flattering the size of the package. But more than the size of the package, what I think is very interesting is the mention of bold economic reforms, mention of labor reform, land reform, liquidity, and therefore my reckoning is what we'll hear from today onwards is that not only are they going to give tax breaks, not only will there be cheap money on offer, but I also think land will be on offer. Perhaps free land or subsidized land will be on offer. And that I think is the most potent stimulus here. It's very rare to see the government of India making land available for industrial use. And if we do see that, then I think both FDI and domestic capex will benefit from that. It is relatively clear from this whole focus on self-reliance that there will be focus on medical equipment, on defense equipment, on electricals and electronics, potentially on light industrial manufacturing more generally, and that should be a tonic for many of these capex sensitive sectors. So we look forward to the details. But if you genuinely there is land and labor reform on the anvil, I think that's far more exciting than the quantum of the package itself.
Well, that's an interesting thought, Saurabh. I would reckon that you yourself would probably agree that this is slightly long-term in nature. In the near term, even if that comes about and it's as exciting as, and I'm hoping more exciting than what you are penciling in right now, hoping for right now, do you think the valuations are a bit of a deterrent, keeping in mind what the world is going through as well? From an investor perspective?
Yes, as I've said several times before in our country, the bulk of the Nifty has a more fundamental challenge than coronavirus, and I don't think the bulk of the Nifty's challenges can be addressed really. The bulk of the Nifty have business models which simply don't generate cash for decades on an end, and therefore I think valuation is a perpetual challenge for most Nifty stocks, but they simply don't have cash generative business models. But for well-run Indian companies, whether they be listed or unlisted, well-run Indian companies which provide essential products to Indians, whether they be transportation, FMCG, financial services, for well-run Indian companies who have cash flows, who are broadly robust business models, decent economic stimulus will get them back on their way.